welcome back to the carnage. Oh man, we got shit flying all over the place today. It was a morning to wake up to, I tell you. It was crazy. Not even because of any freaking news events, just because the market's fucking crazy right now. But yeah, what's up, Mike? How's that? How you staying afloat over there?
Great. I mean, look, those of you that have listened to us have had a nice little ride through here. And I mean, you're exactly right. I don't know, in the 30 years that, over 30 years that I've been trading, I can remember waking up to the carnage that we're seeing overseas. I mean, look, the currency markets are broken, okay? The funny thing is, Ty, it's like, I'm on Twitter, right? And there's people out there trading that should never be trading because they have no idea what the F is going on.
Right.
And you got people, buy this, buy now. I mean, when the currency markets are falling apart. Yeah. Are you effing stupid?
People.
I mean, seriously, I just people, and this is the problem. People should not be trading if they can't understand what's going on.
Here's the problem about traders nowadays. They're not a complete trader as far as this type of market right now. It's super important to understand macro fundamentals and all that stuff. And once we hit this type of market, people are sitting there with their fucking dick in their hand, not really knowing what to do because, well, I should have dip bought this, but no, fundamentals, dude, this thing could keep fucking ripping down here. So it's just like people don't understand.
They have no clue, Ty.
I mean, why the hell are you going to be buying
I'd
this
say
shit
maybe 5% of people out there have any type of clue what the hell's going on or the depth of what's going on. And so they just keep on getting their ass handed to them.
Yeah.
And so, but this is why we do this show. It's more of a pain in the ass than anything. This is why we do this, try to help people out, right? That haven't been through these type of markets, that don't understand what's going on in the depths of what's going on. But I mean, we're on the verge of a currency crisis.
Yeah. I mean,
and I mean, how can you be bullish? Okay. How can you be bullish when we're on the verge of a currency crisis and a collapse? I mean, I am dumbfounded by Twitter.
Yeah, right. I mean, you already have the yen intervening. You already have the pound talks about dude, the freaking pound hit all-time record lows, broke 1985 lows. You're right. We're in a currency crisis, and people are sitting here saying, "Let's buy this shit." I'm like, wait, what?
You could have fun just reading this shit. But anyhow, the CME halted trading in the British pound future. Okay, and they had a currency flash crash, is what happened, which necessitated the temporary halt of the trading of the British pound future, and it's all stemming. I mean, look, the dollar. How many times have I heard the dollar's top? Oh, this looks like an exhaustion candle.
That's the problem.
Shut the F up, okay? If I hear the dollar's top one more time by these. Never mind. You could get me off on a tangent. I can't go off on a tangent because I'm having too much fun. But anyhow, it's crazy. It's crazy. Okay. So you have the dollar soaring to highs. You have the new administration in the UK basically coming out with a budget that says we're going to F the UK for all eternity with all these tax cuts and everything else that's going on. And the market's spoken, and the pound is just goodbye sterling. So and I told my mentor group, we talked this morning. We have our meetings in the morning at 8 o'clock, and I told them, I said, look, be careful. Do not chase this wandering rally that we kind of called the rally that we were going to get this morning. Don't chase the rally, because the Bank of England is going to have to come out, either they're going to have to do something. There could be, and I thought maybe, I was actually trying to be smart. I actually thought maybe they had their heads with them and they were going to come out with an inter-meeting rate hike to kind of settle markets. But no, which in that case, I think we would have got a nice little drop on the news, frightening people, and then I think we would have got a rally. Instead, we got the exact opposite. You had the BOE coming out and issuing a 2-paragraph statement. Oh, this is what we're here for.
Yeah.
And of course, that made things even worse. Okay. But it's just, there's a lot of cross currents going on, and the Forex market, which you trade, Tyler, is by far the largest market in the world.
Oh,
okay.
By far.
So, we talked about there's the Forex market, there's the United States bond market, and then there's the equities market, which is a little tiny little market. Okay. So the Forex market, so you got to look at it like this from a fundamental standpoint. If the Forex market is out of whack and is having issues, and by the way, I think that what was the British pound to the dollar? Wasn't it like wasn't it 1.4 at the beginning of the year?
Yeah, it was.
You don't see that type of movement in currencies, and if you do see that type of movement in currencies, then you better go grab your gonads and go sit somewhere in the corner.
Yeah, dude, that was a 27% drop this year in the fucking pound.
Yeah, you don't see that. That's just doesn't happen. And so we have the largest market in the world dislocated, and under stress. How do you expect the smallest market in the world to, and then you take the next largest market, which I believe is the United States bond market, and that's under stress, obviously, looking at the 10-year, where I think we hit 4% today. So how in the world do you expect this little tiny market to come home? Okay.
Yeah. And that's what I'm saying. People don't understand the fucking market sentiment nowadays and how to read it. Like
So it's interesting. It's fun. Yada yada yada. Welcome global depression, or welcome emerging market blowups. Let's just we grab the popcorn, man. I mean, that's where we're at. I mean, look, who knows what's going to happen? Are we extremely oversold? Absolutely, as we'll get into the charts. But I mean, there's a lot more stresses coming down the pike. And it's not like, and this is the reason funds have been out of the market. And you look at the inflows, they're out of the market, and the reason, and obviously you look at the dip, the feeble dip buy attempt this morning. Nobody has ammunition that they're willing to throw into this market at this point, especially with us still not really below or blowing through June lows like we did in the Dow. So. It's very, very scary times out there, very tough markets to read, very tough markets to trade. And there's a lot of stresses in this market. And I make things matters even worse. We did have did you see the Dallas Fed survey?
Yes.
So, I mean, well below it. I love the Dallas Fed. That's my favorite one. Because you always get some colorful commentary from them. Did you see what they said?
No, I don't think so.
Okay. We are living in Alice in Wonderland.
Oh.
This shit just gets worser and worser.
Yeah.
So, I mean, look, Dallas Fed survey, again, fifth straight month down. I'm sorry. It's in contraction, been in contraction, blew out to the downside worse. We are in a recession, obviously. And, it's putting a stress test on a lot of things in the markets, but it's just crazy what we're seeing. And so just be careful out there. Just, again, this is why we do this, to kind of help you guys navigate these waters and not to get stuck into some kind of, value trap where, you're thinking you're buying low and you're going to get opportunity to buy a lot lower. So, and Goldman came out with their analysis, and basically, same thing, said, they see, I think Goldman now sees 3,200, which was my target. They kind of stole, but let's kind of get into the charts, because I want to go through and let's talk about what our targets are and where we think we can land and yada, yada, yada. So this is the SPY right here. And actually, let's start at the monthly chart. So looking at this monthly chart, Ty, this is obviously going to be an important week. We've come down pretty far, pretty fast, without any, just really without many bounces in here. Sentiment extremely oversold. What are you looking at right in here as far as, if we do drop farther eventually, where do you see us going?
Yeah, I mean, it's pretty clean as far as you're seeing these top wick rejections and a straight dump. No bottom wick on this last monthly, this current monthly, having no problem breaking through these lows of the last few months here. And so, I mean, looking left in the monthly, it's very, very clean price action looking until 320. I mean, the next area, if we can break through this month low here, which is what, it's March or something, I don't know, May, I don't know what this is, but wherever that, May, June. So if we can break through June's low with some conviction here, which seems like we are, then 320 is the next stop here.
320 next stop. Well, I tell you what, I think, I think 280, I like 280, 270 in this area. I think, eventually we get down to this area. We could even get down to COVID lows, as far as I'm concerned eventually, but we'll see. A lot to go. If the Fed capitulates and things start breaking even further, that's the case for the bullish side. So, maybe they will do that. But understand something. The 70s and 80s, the Fed is pretty much establishing they're not going to follow the Volcker plan as far as that's concerned. And that's the issue, because we've had this type of market before. Go back and look at the market in the 70s and 80s, and it's just been broken. Right. And it was broken back then. And the problem is Volcker did stop raising rates. And then what happened when he cut rates? Inflation came back even stronger, which pretty much extended things out even further. And if you look at the markets between the 70s and 80s, we went nowhere. I mean, we were in the biggest trading pattern zone that you've ever seen. We didn't go anywhere. So that's what Powell's trying to avoid. And that's why I really, unless something breaks, they're not going to make a pivot in here, which is, no way you can buy. If they're not going to make a pivot, there's no way you can buy this market other than a short-term trade bounce out of it. So that's something to kind of think of. If you look at the weekly chart, pretty ugly weekly bar last week.
Yeah, that pretty much gives you the confirmation that we're fucking just dying here. I mean, you have the exact trend line I've drawn, strong close below, and now we're looking like we want to break last week's low to head down. I mean, this thing is just going, it just has so much room to go.
So much room to go. But, we could get a little bounce out of here. But, at any point, you always got to be ready. 362.17, still haven't hit it. We're so close to it. If it happens on the show, we'd be pissed. Okay? Because I vowed not to trade during the show again. Mm-hmm. And if it happens, I've had a great morning. I'm not trading my profits away. But if it happens on the show, I'm going to be really pissed if we break these lows. Because I've been waiting for this trade. I waited for it Friday. By the way, Friday was if you couldn't make money Friday, then you need to go sit in the corner with the guns.
Oh, my God.
So, I mean, the short cover into the close, come on. That's it's you could have seen that coming, like you could have seen the freaking Wawa store getting run over in Philadelphia. Did you see that over the weekend?
Yeah.
I mean, to see what kind of where the world is now, other than this fake media, not fake media, but that media doesn't want to show you. Just look at what happened with the Wawa store in Philadelphia. Yeah. I mean, they're just people running rampant, just grabbing shit. Here's the 4-hour chart, Ty. What are you looking at here?
You know
what I'm looking at? Flag.
That's exactly what I was about to point out. Is
flag.
The annoying part is that it's just been exactly straight 23.6% consolidation the whole freaking way and hasn't had any real pullback, which tells you that there's straight fucking selling in the market market here. I mean, there's no dip buying anywhere. And so, I mean, until we get some type of, break of the last high here, then it's just, this thing's going to keep doing the same thing.
16%, man. We're down 16% from the goofballs that we're buying in here.
Yeah.
Goofballs.
Yeah, it's ridiculous.
I swear to God. So, so straight down flag. So if you don't know what a bear flag is, Ty, we're bear flag, right? Bear flag. I mean, you could say it's a bear flag, kind of consolidation, bear flag. Yeah. So, I mean, whatever is what it is. And, looking at the 15-minute chart is what it is, right? Now, look, here's Friday's trade action, by the way, and this gave a great trade. I mean, these A+ setups you got to grab. Look at this. Touch, right into here. Nice engulfing candle out and then into the close. So beautiful trade. And if you go to the 1 minute on that, you can see this right here. Look at this, just nice action out of here as going into a weekend. And by the way, it's not just going to a weekend. It's a holiday today, Todd. Did you know that? Yeah, did you know that?
No.
It's a holiday today. I forget. I'm going to screw it up, so I'm not going to say it's a Jewish holiday. I believe it's a Jewish New Year's or Rosh Hashanah, something like that.
Is it?
Yes, today and tomorrow.
Oh, Rosh Hashanah. Yeah, right.
So you can correct me if I'm wrong. So any our Jewish folks, happy holiday, whatever that means to you. But this, God, we're gonna break this. I swear to God, we're gonna break this.
Oh fuck yeah, dude! We're heading to lows today, absolutely.
So this is what I told the group. I said, okay, look, Friday lows. This is what you gotta watch. Okay, Friday lows breaks. As long as we don't have a look below and go, then we're gonna get this action right here. So look, we're high, lower high, lower low, lower high, lower low. So please wait until 2 o'clock.
Dude, this was the most predictable price action today. I was on stream with my buddy on Zoom after the stream here. We both literally said it's going to run through highs here, break down, retest, and dump through lows. And we got exactly what we got. I mean, it was textbook trading today in the market.
Well, I'm looking for a break of these lows and then a bounce.
Yeah, definitely.
That's what I'm looking for. That's my goal. That's my setup. So I was looking for it Friday, didn't get it. You look at tech kind of, hanging in there actually, better than I would have thought. I mean, they're only down 0.5%. So believe it or not, with rates running,
I know.
I think tech would be getting shellacked. But again, and then if you're looking, hold on, we're off the freaking charts.
Just as we thought we were catching up.
Yeah, just as we thought we were catching up, real rates, tips, just drop. I mean, we gave you this chart. I know Michael Myers had given this chart out as well. I mean, and it's nice to see other people kind of following this now. But, I mean, we gave you this chart, and we've talked about this, and it's just amazing to me that, how it's playing catch-up in here.
You got to use the left scale. The left scale's for the,
Oh, okay. There we go. Thanks. See, I don't even know how to fucking use these numbers from charts. So yeah, there you go. Kind of lining up, and this says more. We broke Friday's lows, so let's see if we get a little shenanigans around here. Maybe we'll get a little pop up. You're gonna make me trade this, aren't you?
Oh, anyhow.
That's the cue. You're gonna be here. Order filled. IWM very close to 2022 lows as well. Not, completely led this way down. I mean, the last couple of days, it's trying to play catch up as it was doing better. Dow has never recovered. Have you broken Friday?
Poor Dow.
Yeah, FU. So Dow's at lows. Not surprising. VIX, though, I'm telling you right now, I used to see the same thing. Oh, the VIX is up. No, the VIX, yeah, it's up relatively speaking.
It's at least nice to see that we're starting to get some movement.
Yeah, it is nice. Okay, but look, I mean, it's not even gotten. This is the range that the VIX should be at.
Right.
I mean, we're breaking June lows. We're going to break June lows, and see, we're getting this nice little bounce off of the break of Friday's lows.
I mean, we talked about it. 45 to 80 in the VIX is where we've seen like bottoms in the market. We're not even close.
I'm not even asking for that time.
Yeah.
Okay. I'm asking just for what we've gotten this year, back in, May and June when we had some,
I hear you.
Bad market action. So just very complacent, very grindous action. And that's the worst action if you ask me. I'd rather see a volatile, you rather see the spike so we can get the bounces out of it, and we're not. And so for you dollar toppers, who is the dollar topper in here to call the top at like 110? Or 109? I don't remember. Who cares? It doesn't
Mark's
matter.
defense, it's exactly what I was saying earlier today. The people who were calling the tops don't understand the macro fundamentals in this stuff. And it's just, until you understand that stuff, it's going to be tough to really break through in trading.
Well, I mean, look, it's you got a lot of hedge funds that are on the wrong side of this trade. A lot of hedge funds got out.
That's the reason you're seeing the pound flash crash, is because there's a lot of leveraged funds who are getting fucked.
And that's the other thing that we haven't really talked about is the stress in the market. So you got margin calls galore. You got pension funds that have leveraged trades that are going to be getting margin called. There's a slew of selling that could possibly hit this market if we really capitulate down to the downside to really make that go down. And I talked about reserve balances. We talked about the reverse repo market, right? I mean, reserve balances, $3 trillion, down the lowest since November of 20. And when it was down to $3 trillion, the S&P was at 3,500. Okay, so that gives you kind of an understanding of what's happening right there. But the dollar, and I know you're going to go over the dollar, didn't mean steal your thunder. It's going to be interesting to see. So, but this is the story here that I wanted to get to, which is the 10-year. And I mean, look at this.
Yeah.
Stocks are not going up while rates are doing that.
Dude.
I mean, it's going to 4%. I mean, stocks are not, repeat after me. Stocks are not going up when the 10-year is doing this. Guys, I mean, I gave it to you. You got the dollar, you got the VIX, you got the 10-year. Watch those three things, please, and that'll give you a guide for what the heck's going on in the marketplace.
Yeah.
Okay, if you even got a chance for a bounce. Okay, so that's the way I'm kind of looking at that. So nice. I mean, the bonds just aren't stopping. And this call comes back, and I'll hand it over to you, Ty. This comes back, though, guys, to the intervention in Japan. The Japanese are the largest holders of treasuries, okay? And when they're going in to defend the yen, they basically are going in and they're going to have to sell treasuries. That's what they're doing. So where's this selling coming from? It's not just short sellers pressing the markets. It's also, you got Japan, large foreign buyers that are liquidating their treasury allotments very quickly, and that's keeping up this pressure on the treasury market. And you also need to look at the auctions. We got several auctions. We had the 2-year auction today, which was a disaster. Okay, so you need to look at the treasury auctions. You need to understand the treasury auctions. And the treasury auction was a disaster as far as bids coming in. And we'll get into that. I mean, we don't really have time to get into that, but that's something you might want to take a look at as well. So, I already talked about it. Reserve balances getting squeezed down. We got QT that just started. And that's, QT just ramped itself up. And that right there is going to be draining bank balances and putting stress tests on the liquidities of the market. And so with QT, several different ways that, the Fed can get paid back. But, the way we're looking at it, most of it's going to be money coming out of the banking system. And that's going to put stresses on the Fed, and it's going to put stresses on the back end of the curve. And that's why I said, we're looking for rates to rise on the back end of the curve as well. And I think you're seeing that as well. But right now, I mean, you're not seeing it. You're still seeing the inversions. I mean, the 30-year is only up 0.8%, 0.9%, while the 10-year is up like 2.5%, or excuse me, up 5% as the 10-year. 30 years up like 2.5%, which, so we're still getting those inversions, still not even seeing the back end of the curve rates rise as much as we expected coming out of QT, but I think you're eventually going to see that, and that's going to put even more stress on what we got. So a lot to look at. And, you know, also think about like this, a lot of people have been effed. The money's gone. They lost money. Do people lose money in bear markets? Yeah, they've lost money, so they don't have the money to buy back in when it's been destroyed. So, yeah, and I was saying that too, Mo. It looks to me like that too. It looks like we could go down to even COVID lows. So we'll see.
Yeah.
Still got a lot more. I mean, the market's holding up so much more better than really you would expect it in this with the stresses that we're seeing. But yet again, we just started this process. We've just started seeing the carnage. We're just starting to see some things break. But what about the dollar, Ty? And before you share the dollar, I want to share one thing, okay? Because I got a chart on that. And let me see if this is gonna work. It's not a clear chart, so I apologize about this ahead of time. Well, I forget, and I want to give credit. Oh, it's from Morgan Stanley. Okay, I got this chart from Morgan Stanley. Okay, so can you see this, Ty?
Yep.
Okay, so this is every time the dollar has been at this level, we've had some type of crisis. Tech bubble recession, housing bubble peak, GFC recession, so sovereign debt crisis, China devaluation, global recession. Here's where the dollar is as far as the year-over-year change is what you're looking at. So now what are we going to put in this label here? So global depression.
Right.
I don't know. So, you know, also another little chart to kind of give you a little inkling of where we are. So, but what are you seeing in the dollar, Ty? I don't even know how you can do analysis of it.
Yeah, dude. I mean, it's tough. I mean, look, Mark, bro. The flash crash has nothing to do with the Dixie peaking. And let me explain to you why.
Actually, it's the opposite.
Right. No,
the Dixie's peaking today because of the flash crash. If you ask me, I mean, as far as the Dixie going up, because it's again that formula. But
right. No, and that's what I'm saying is I don't think the Dixie's tops by any means, because look, in order for the Dixie to even potentially peak at this, you're going to need some type of intervention with Bank of England, and you're going to have them come out to emergency rate hike, yada yada. They already came out and said they're not. They came out and said, look, we'll see where we're at next meeting. There's nothing going on over there with the pound, and it's at freaking all-time lows, record lows, and people are getting leveraged out here. So the dollar, I mean, if you look at even if you look at fundamentals aside, technicals, there's no resistance until 120. So it's just, why call peaks and keep expecting that we're going to peak when you're going to keep calling peaks the whole way up till we actually reach an area where, yes, we might peak. It can hit it. It can stay at extremes for as long as it wants to. So
I love that, Ty. We eventually will peak.
Eventually, you can keep calling.
I might be 60 years old.
That's what I'm saying. It's just and so it's just, you know, you have the euro, and again, it's basic like fundamentals. You have the euro at fucking lows, below parity. You have the pounds almost at parity at all-time record lows. You have the yen that's doing a failed intervention, which is worse for the yen and increases the strength of the dollar. You have a yen failed intervention. What the fuck else is there? It's just, dude, nothing's going to change right now until we get some type of global reset. I mean, there's like why would the dollar randomly peak when nobody fucking wants to own the shit ass pound or euro or anything? But yeah, like Mal said, crashes happen from oversold levels, and that's exactly right, and that's where you get the most capitulation. And so I don't know, dude. It's just look, dollar's not. It's such.
Well, I think the statement you made was best. Is who knows if it's going to peak or not peak? Who cares? The point is your goal as a trader is to trade it as what it's doing now, and
right.
And the dollar's going up, so where's equities going? Down.
Yeah. Right. Yeah. Exactly.
That's all I need to know.
Yeah. Right. But yeah. So like, I mean. Until I see some type of fundamental reset, it's not, I'm just going to keep trading in the same direction of momentum it is, and that's buying. Taking a look at the, look, I'll just run through the charts real quick. Pound USD, looking at all-time, I'll pull up the monthly. 1985, the lows right here. We broke through it. If you look at the intraday 1-minute chart, I'll show you the flash crash that we had overnight. This is the flash crash on the 1-minute chart that we had overnight on the pound. Just up the 5-minute, you can see the one bar, massive drop. Just a lot of leveraged funds getting a lot of stops, a ton of stops getting hit on that move, and it's still sitting here at lows. I mean, looking at the overall time frame here, maybe we go sideways a little bit to blow off some of this move here, and we sit inside for a couple of days, but that'll just mean that's going to blow off the oversold move. Then we start heading back down, and so it's just pound's going to parity, just like the euro is now well below parity, and it's, if you look at the euro in here, I've had this trend line, this channel drawn for a while now. And I kept calling, I talked about it back in this peak here. I said, looks like we're heading back down to the bottom of the trend line here. And that's where we're heading to now. And we're back now to 95. And so, maybe we get a little bit of a technical bounce. But I don't, it hasn't peaked by any means yet. So, still seeing the straight sell-off and all that stuff. USD JPY, the yen intervention really fucking works. Now we're heading right back up towards highs, towards 146. A lot of the Forex ministers over in Japan said, look, they're not defending the 145 level yen. It's just all like smoke screen for you. It's just yeah.
The intervention never works.
No, never, ever. This is like the third time they did it, and it hasn't worked yet. So it's
just raise rates for crying out loud.
Yeah, and which they refuse to do. So. That's the global currency crisis you're seeing right now, in a nutshell. Looking at gold, and I don't remember who said it. It's probably Born Lam because he's in love with gold, but it might have been Mal.
Well, it is sexy though.
Look,
sorry.
Gold's going down because the dollar's soaring to highs here.
Right.
It's not that complicated. The gold's priced against dollar, and it's just fucking, now we're going down to hell here. And so, looking at the monthly chart, it's shooting a beautiful, just like double top M pattern here that we're now heading back down, and 1500's looking pretty nice for gold, and it's not even really oversold. Looking at the monthly, we're sitting at 40 on the monthly. We're sitting at like 30 on the weekly, so daily's just chilling. So it's just not even close to being oversold yet, and it's breaking through all these levels. And so if you look at it, I talked about this consolidation where we accumulated a lot. Friday had a nice close below. That should have given you enough indication that we're going straight down from there. And 1580, 1570. That's going to be the area I'm going to be watching for the next potential bounce or consolidation in gold. That's the next area that we've had issues before. Other than that, it's straight selling down, and so it's why trade against the current when you could just go with the flow here. And so shorts all day here. Now they're saying gold up in euro. Okay. All right. Nobody trades gold price against the euro now. Oh my God. It's not even.
No, a gold up in the euro. Gotcha.
Gold up in euro. goes on up in euro. Anyway, oil, same thing. Dude, oil market's broken. I don't even know what's going on with technicals here. I just, the one market out there that makes 0 sense to me is the oil market. I understand it's not really going to break out or go really far because the dollar is so strong. But for this thing to start selling off pretty heavily, breaking some pretty major levels, when the fundamentals say the oil market should be strong, it's just fucking crazy to me. So I'm not really putting a fundamental bias on oil right now. I'm just trading technicals. And so I've just been, technical shorts right now are beautiful. We broke 78 today. That's a beautiful level to short off of. It was the peak back. It was the peak back in, or the bottom back in 2012, 2011. It was the bottom back in 2021 here. It's just, so this is a strong level we just broke through. And so now we're heading down to 66. Citi called 66. They only said that if we're hitting a recession, which I think we will. But look, maybe it's pricing in a fucking recession already. A global recession, global depression. But Ty basically about, when we go to 60, 65? Yeah, exactly. I think 66 is the next stop for oil, honestly. I mean, fundamentals aside, which is stupid. It's pricing in a recession or something. So it's going down to 66 is what I feel like. But yeah, I had a really good call out on it today. Talked about the break here from 78 to 80. Topping out at 80 and then reversing from there, and it's exactly what it did. And so now playing the shorts. And so next area you're probably going to see some support. It's going to be around 75. And then once we break that, we're heading down to 66. So we'll see. Yeah, I mean, last but definitely least is Bitcoin.
Oh, come on, man. Bitcoin holding its own here, baby.
Dude, it's crazy. Bitcoin's holding up. Out of all the carnage going on in the dollar, out of all the selling going on in the equities, out of just everything, somehow crypto is holding that 18,000 level. Just, it's holding on for dear life. Dear life. And it's just, somebody doesn't want to push it down. But I tell you, it's because we got MicroStrategy leveraged in it. We still got Tesla leveraged in it. So, I mean, you still got some big boys in there leveraged in it. So it's holding up for now. But I think once we get a crack in the market and we start getting VIX moving, then I think Bitcoin's just dead. But right now, it's just, there's not enough volatility out there for this thing to start cracking yet, I guess. There's enough support there for it. And so we're holding. But once we break 18 and we start seeing a sell-off, then it's going to be a free fall down to 13,000. But yeah, that's it for me. I'll give it back to you, Mike. You can take it away.
Awesome. Yeah, I mean, gold, oil, dollar, it's all breaking. So anyhow, just be careful. This market is a very risky market to me. In that you got so many, the fact that we haven't bounced yet is just scaring me. So just make sure you keep your stops tight. And if you're trading this market, make sure if you're invested in this market, you be safe, because this market, we've come down so far so fast, and you look at the sentiment readings and it's through the roof. I mean, this morning you could have cut on the desk, you could have cut the sentiment with a knife, right? And typically you see a bounce out of those type of conditions, at least a short-term bounce, and we're not seeing shit.
Yeah.
And which kind of gets the feel for markets. If everybody's looking for that bounce and expecting some kind of bounce out of there, you just, markets can go down a lot farther, a lot fast, and stay dislocated a lot longer than you can stay liquid. So again, trade the action. I mean, we were so close to lows. It's so funny. So yeah, and I'll review stocks. if you look at, Mark said, I don't even think he doesn't believe the SPY is going to break its lows. Okay. Which, I was laughing as I was looking at that comment. I'm like, I'm praying it doesn't break the lows while we're on the show, which is 362.17. So, just be careful getting stuck in one little bias, right? It can really, it's kind of like, and again, it's interesting because when the markets, remember 2000, and Mel will remember this, in 2000, we had, Mal was coming out and just, constantly negative, and the markets kept on going up, and, it's like, the key is not to die on a particular thesis, it's to make money. That's our goal here. Okay, we're trading to make money. We're not trading to call top bottoms and whatever. We're trading the action and what the chart says. And sorry about that chart. And Mark, I hope Meta goes up, but he's like, well, I hope you guys in Discord, Mark, remember you're saying, I hope you guys are happy it's going down. I don't care if it goes down or up. I'd rather it go up, to be honest with you. But it went down because this is what the chart said it was going to do. Right? It's not that anybody's a Nostradamus or anything like that. Just like when EMPH, it went up because why? The chart said it was going up. It's basically, good charts tend to be great charts. Bad charts tend to be bad charts. You don't know, and a chart is nothing, right? All a chart does is basically give you a way to look at the pattern of individuals that are buying and selling, the psychology of what people think about that stock. And so, be careful, dying on a line, looking at a chart in here with all these lines and stuff like that. We all do it, right? But sometimes, my mentor used to tell me, Mike, if you can put a chart up and go to the other side of the room, you should be able to see who's in control of that chart right there.
Yep.
Right? And that's ultimately what it comes down to. And that's why we say there's good charts, there's bad charts. And what we mean is who's in control, bulls or bears. So, Meta, I don't care if it has great products. I don't care what the value is. I don't care what any of this stuff is. What the market's telling me and what buyers and sellers are telling me is I'm probably going to get a good chance to buy this in the 50s.
Yeah. You know what?
Okay.
If Mo calls it a trash company, then it's gotta be a trash company. Because Mo likes buying those bottom feeders.
Yeah, and that's all I'm saying. I don't care. I don't care what happens to a stock. I'm trying to find out when I can buy, I'm not going to get hurt. Because I can't predict markets. All I can tell you is the sellers are in control of this thing. So just be careful. And it's the same thing. When I look at Apple, Apple is holding up just incredibly well. Now, I will say this, and I did trade Apple today. It was a great trade. But I will say this, don't lose this level right here. And you don't want it to lose this 150 as far as close below this 150 level, because then I think it's going to open up a trap door. What do you think, Ty?
Yeah, no, I agree with that. Mainly because when I was keeping an eye on this area back here when we broke those lows, creating that divergence. Typically, the area I watch is going to be this previous, I guess, neckline here. So we come on the backside, had the retest and broke through. Second time below is where I think we break down and below. So I'm in agreement with you. Is if once we break through this level here is where I think then we see lows again, personally. So
gotcha.
But
yeah, and Mo, yeah, absolutely. But yeah, exactly. Who's going to hold through all that? And the point is, there's opportunity cost. So one of the stocks that we had traded was a firm, right? And we made a bunch of money on a firm when the chart looked like this. And then in November, we were famous for putting on our short. We said, F this, still holding on that thing until it goes to zero. But the point is, is that, yeah, if you would have held through this, you'd be right, but the risk the tail of the risk is just too great to sit through all of that, right? And so our goal as traders, we want to make money on the front side and we want to make money on the buy side, right, Ty?
Yeah,
and
exactly.
It's the same thing, when we were playing the video all the way up here. Yeah,
Damn.
When I'm trading Nvidia at 300, 320, I'm not looking to hold that long term, okay? Because look where it's at, 123. So ultimately, the value always plays out eventually. But the point is, there are periods of market dislocation where you can make some decent money. And to me, that's what trading is all about. It's not about, and there's different time frames. So, and that's why me as an investor, me holding this chart up to 340, and not selling when it breaks 280 is like negligent, right? Or not selling when it breaks 240, when it breaks the active sequence, right? I mean, that's the point. The point is you just, I don't believe, look, I've been in the business. I'm in the business, okay? And buy and hold has been created. There's a reason these financial advisors say buy and hold, because then they don't have to deal with the questions when the stock market goes down, okay? And yes, does the market ultimately go up over the long run? The answer is yes, but I'd rather sell this stock when it breaks its active sequence, which was around 300, and then buy it cheaper when I can. Why hold through all this? It's just BS, and it's laziness in with what a lot of the professionals do. Yeah. So, and that's the point, and that's the thing. I mean, you can, all through here, Mal was cursing us, hating the market, right? And now all through here, he's throwing bear parties. And Mark's cursing us.
Yeah, right.
Eating and wanting to hang himself and, catching a falling knife all the way down. So, I'm using it as two examples of just somehow, man, be in the middle. Just trade the action. And, you can make a lot of money doing that way. And don't buy these charts like that. Yeah. Don't buy these charts. I mean, you're going to get some really good opportunities. And Mark, you love Meta's business model. Okay. Well, guess what, man? Imagine being able to buy Meta, even at 100, right? Compared to where it was. I mean, yeah. I mean, eventually when the model takes off, if it takes off and they execute, then you're going to be able to make yourself a lot more money than buying at 150. When it goes down 100 and you're down 50%, you got to make 200, 300% just to get back to even. So, you get that's the art. So AMD, look at this chart, Ty. What do you think of AMD? Which we're looking to buy AMD. They just came out with new chipsets and they're going down.
Yeah. Yeah, no, I mean, it's just, I can't even analyze it. That's why I go to the monthly time frames, because I don't even know what levels to look off of. So I just...
No, you can't. Yeah, you got to go to the
That's what I'm saying.
And it looks like a big head and shoulder.
I know, but I'm kind of with Mo as far as 40 to 50 area looks really nice to me. I mean, we'll obviously see how, we'll have to see how he reacts in that area. But, I mean, there's a lot of accumulation and volume in this area here, and so once we reach this area, I want to see how he reacts before buying, obviously. But
35, I want to buy 35.
Yeah, that would be nice.
Hey, man, wouldn't that be? It would be great.
That would be really nice. Oh man.
Well, I mean, that is the issue. I mean, the issue is, and again, and Mel, you hit the nail on the head. There's no inflows going into this market. Okay, if I pull up last week's, and we always look at inflows and outflows because that's an important part going into the stock market. And if you look at this here, and I'm pulling it up, U.S. equities 5-day flows minus 7.5 billion, international equities minus 0.5 billion, fixed income minus 3 billion. QQQs led the outflows minus 2.8 billion. Okay, you can't get a market going up when you have outflows of that magnitude. Okay. And what is the bull case? I've yet to have a bull case person come on here and tell us what the bull case is, right? Because the one theme, look, we know what the bull case is, right? We know what the bull case is. The bull case is, I'm just checking to see if we hit lows yet. The bull case is when the Fed pivots. Okay, I'm letting you guys know now when it's time to buy. When the Fed pivots.
So 2025.
But the problem is, they've shown the only way they're going to pivot is if there's a crisis, if something breaks in the. I went over this with you last week. Either credit spreads go out of whack, and the reason credit spreads are so important is because then you have basic business can't be transacted. And we talked about, we looked at high yield growth, right? Look where high yield growth is right now. Just completely down. The only way the Fed's going to pivot off where they're at is if they get some kind of market delocation that's going to really just businesses can't interact. Just like back in 2008, right? We had the money market break the buck, and they had to come in and come in and defend that. So there's some things that can definitely get us bullish, but right now I just don't see it other than short-term bounces out of here. Now, the market is heading back to Friday's lows in here, which is right here. What's the next trade, Ty?
Yep, lows 362.
June lows. So
Coming.
We will see. And I don't know how you can really even get bullish until we break those. And that's why that's what I'm looking at. So the key is we've just started in this housing downturn. Okay, we just the key report. We got a key report. Friday is PCE. Okay, and then Friday's PCE, and then we also have next week I told you the labor report. The non-farm payrolls is way more important to me. I think inflation narrative is done. I think right now we're looking to see how hard this recession is going to be. I think that's where the market's turning itself to.
Yeah, exactly.
I really do. We get a better than expected CPI report. We will bounce. Okay, but I think the market, and even I think most people understand, CPI has topped, but it's just going to hang around here. There's that sticky core. And remember, the Fed funds rate needs to go. The Fed has stated this, and it always has happened. The Fed funds rate, which is at 3.25, Ty, needs to go higher than the CPI rate. And the CPI rate's at 8. Fed's at 3.25, CPI's at 8. Okay? So through a combination of the CPI coming down and a combination of the Fed funds being raised, that's what you got to look at. So, this is a tough market. You got CEOs biting off noses of people at football games, for crying out loud. People are stressed beyond belief. And the stimmy checks, that's what caused this. The money supply, with going up, that's what's caused this inflation route. So if you want to see what caused inflation, here, I'll show you a chart right here. Can you see this, Ty?
Yep.
Yeah. This right here is what has caused your inflation. It's all that free money that was doled out, and that's the issue. So, we're bouncing again off. So the third try off this little low of Friday's low probably will be the break, because we're now bouncing off of this Friday's low. So what I'm looking for, and I'll just finish up on that real quick because we got to go. I'm looking for, Ty, okay, if maybe we get a little bounce and kind of go sideways. If we come down to this for the third time, I think we break it. And then if we can pierce through here, the June low, think we get a trade to the upside out of there. What do you think?
Yeah. No, I agree. And I mean, the weekly chart had pierced below last week. So, I mean, the weekly chart pierced below last week's low. And so now we're just seeing a little bit of, tug of war there. But ultimately, like you said, I think one more retest of the lows there is going to give us enough momentum to push down towards 362. So, I'm in the same boat as you.
Yeah. So let's get this. Let's get this piercing through because look, the market's set up for the market knows traders are trying to short these levels. Okay, so that's they're trying to give the max pain trade. So they know. Look, there's not. This game's so easy, man. Of course, they're going to pierce below this low, suck in the retail traders that have a stop that is the pre-market low.
That's the way the market is now.
Right. I mean, they're going to suck in those retail traders that are shorting this, and this is their stop them out, bring them back down, suck them in again, stop them out. It's called grabbing liquidity. And I think they're going to do the ultimate suck out right here if we break these lows, and I think we just can really come back up. But we'll see. You got to trade it. You got to get confirmation, and you can't just go with the thesis and then just not check yourself against it.
Yeah.
So.
Yeah.
Well, I don't get me started on election. I mean, we just gave $12 billion today to Ukraine. I mean, we're giving out money like it's candy, and like we don't have to worry about inflation. So, as far as that's concerned, Mo, I mean, it's a disaster, and that's the problem. So, anyhow, guys, I appreciate you. Safe trading. That's our thesis in here. I think we do. I mean, we're so close. It would really be surprising if we don't come down. I mean, I've got them all set up on my IWM, on my QQQs. I got it all set up to see if we, get down to that level at all. But either way, just be safe, and we'll see you tomorrow.
Yeah. Thanks, guys. See you tomorrow.